We can get profits, we can get loss. So how do we account for the profit, which we call the gains, and how do we account for the losses? Can you hear me at all?
Yes, please.
Yes, sir.
Yes, sir.
Very good. So what is the objective of IAS 16? Now, the objective of IAS 16 is just to prescribe how to treat property, plant, and equipment for accounting purposes. How to treat property, plants, and equipment for accounting purposes. That's the objective of IAS 16. Now, to be able to treat property, plant, and equipment on the financial statements, then we should know at what time can we recognize these property, plant, and equipment on the financial statement. So that is the timing of recognition of these assets. And if we are going to recognize these assets on the financial statements, at what values? So we have to determine their carrying amount or their revalued amount. Then, since this non-current assets depreciates, how do we account for depreciation of these non-current assets? And impairment. When I say the asset has impaired, last week I did explain what is meant by impairment. Impairment means the value of the asset has reduced. So we have to account for an impairment loss. And impairment normally deals with intangible assets. And then how do we disclose property, or how do we disclose information on property, plant, and equipment on the financial statements? How do we disclose information on property, plant, and equipment on the financial statements? So IAS 16 applies to all property, plant, and equipment, unless probably there's another standard that deals with that particular property, plant, and equipment. Apart from that, all property, plant, and equipment that comes under the scope of IAS 16 will be dealt with today. And I'll give you examples of assets that we consider them to be property, plant, and equipment. So what is plants? What is property? And what is equipment? So we say property, plant, and equipment. And I use the term non-current assets. So if they are non-current assets, means they are tangible assets. And the essence is that the entity will hold these assets to help them to produce goods and services, or to rent them to others, or use them for administrative purposes. So these property, plants, and equipment, the organization can use it themselves to produce goods or supply services, or they can rent it out to others, or they can use it for administrative purposes. The reason why we call them non-current is that we can use it for more than one accounting period. It means that the asset's lifespan extends more than one period. So we say they are non-current assets and they are tangible. They are tangible. And because we use them to produce goods or supply services, there will be a wear and tear, or the reduction in the value. The more we use it, the more there's wear and tear. on that particular asset. So we have to also account for that wear and tear. And that wear and tear is what we term as depreciation. So when we provide for depreciation, we share it over the useful life of the assets. And then we have to know the method that we can employ to calculate the annual depreciation on property, plant, and equipment. I assume that in your foundations of accounting, you were treated to depreciation. I know you were treated to depreciation and the various methods that can be used in calculating the annual depreciation and the factors that you have to take into consideration in providing for the annual depreciation. All that we are going to do here is not based on depreciation, but how to account for property, plant, and equipment on the financial statement. And in doing so, depreciation calculation becomes inevitable. Depreciation calculation becomes inevitable. I also mentioned the useful life of the asset. Now, the useful life of the asset is the expected life, the lifespan, the number of years that the asset can be in use, to be used in the production of goods and services. When you also hear about costs, here, costs that we use in respect of property, plant, and equipment is the amount you pay to acquire that asset plus any other incidental expenses. I mean, any other expenses that you have incurred purposely. You have incurred purposely to acquire the asset. For instance, if I want to buy, let's say, plants to be used in the production of goods and services, I bought them from a factory in, let's say, Tema. My business is in Kumasi. So the cost of transportation in bringing the plants from Tema to Kumasi and how the plant will be installed in my premises, all the costs incurred will be part of the actual cost that I bought the plant from Tema. So cost is not only the cash you paid, but any other incidental expenses associated with the asset that you have bought constitute the cost of the asset. Then we have residual value. When I say residue, that's the remainder. Residual value means that after the useful life, assuming the asset will last for 5 years, after using the asset for 5 years, if you can sell it for something small, then that is what is called the residual value. So the estimated amount that the business will certainly or currently obtain when the asset is sold or disposed of after its economic useful life. That is termed as the residual value. So we'll be meeting all these terms. That is why it is imperative that you understand the meaning of these definitions in relation to property, plant, and equipment. Then we shall also look at fair value. And I understand I gave you some assignment on fair value. That is IFRS 13. So my assumption is that as of now, you understand what is meant by a fair value. That is the value at which an item can be exchanged between knowledgeable and willing parties at an arm's length transaction. At an arm's length transaction is called the fair value. Earlier, I mentioned impairment loss. When I say the asset has impaired, it means the value has gone down. It means that if I want to sell the asset today, I can't get the same value as the value which has been stated on the financial statement. So if the value stated on the financial statement is 1,000 and I can only recover 800 when I sell the asset today, that means the value of the asset has gone down. That is what we term as impairment. Impairment. So technically, impairment loss is the difference between the carrying amount and the recoverable amount. So the difference by which the carrying amount of an asset will exceed its recoverable amount is what is termed as impairment loss. Impairment loss. Then, when we say the carrying amount, that is the amount that the asset has been stated on the financial statement. When you take away any depreciation on that asset. For instance, if the cost of the asset is 1,000 and I have provided depreciation on that asset 400, then the carrying amount of the asset is the 600. So the amount at which an asset is recognized after deducting any accumulated depreciation and impairment losses is termed as the carrying amount of the asset. Now, how do we recognize property, plant, and equipment? How do we recognize property, plant, and equipment on the financial statement? Again, I assume that you understand what I mean by recognition, because since we started financial reporting 1 and looking at the standards, I have mentioned recognition, I have mentioned measurement. So you know what is meant by recognition. So under what situation do we recognize property, plant, and equipment on the financial statement? At what stage do we recognize property, plant, and equipment on the financial statement? There are 2 conditions. When it is certain or probable that future economic benefit of that asset will flow to the entity, and then the cost or the revalue amount can be measured reliably. Because if you cannot measure the cost or the revalued amount of the asset, then how do you state the asset on the financial statement? So property, plant, and equipment is recognized when it is probable that future economic benefits will flow to the entity and that the cost or revalued amount can be measured reliably. These are the 2 conditions. So when these 2 conditions are satisfied, then we can recognize the property, plant, and equipment on the financial statement. Then we can recognize the property, plant, and equipment on the financial statement. The next one is, how do we measure property, plant, and equipment? Now, with this measurement, we will look at initial measurement. That is, when you are sending the property, plant, and equipment to the balance sheet the first time, or to the financial position statement the first time. That is what is called the initial measurement. And the standard says that property, plant, and equipment are initially measured at cost. Initially measured at cost. That is the key word there you need to understand. All the rest that is following is not anything. All that you need to know is that property, plant, and equipment are initially measured at cost. Then we have subsequent measurement. I mean, after you have initial measurement, what happens? I have already told you that to know the cost of the property, plant, and equipment, it is not only the purchase price that constitutes the cost, but any other incidental expenses that you incur on that particular property, plant, and equipment forms part of the cost of the property, plant, and equipment. So, transportation costs, installation costs are all part and parcel of the cost of the PP, property, plant, and equipment. And even dismantling cost. I mean, after you have used the property, plant, and equipment, if you can estimate the cost that you incur to dismantle it, or remove it, or restore the site to its original site, they will all form parts of the cost, part of the initial cost of the property, plant, and equipment. We shall look at illustration subsequently. So, examples of costs that are not a component of the cost of PP. So, what you see on this slides, if you incur cost on them, it is not part of the cost of the property, plant, and equipment. Example, cost of opening a new facility is not part of the cost. Cost of introducing a new product or service is not part. Cost of conducting business in a new location is not part. Administration and other general overheads are not part. The costs which are parts are those costs which can be directly attributable to the property, plant, and equipment. In that sense, it will form part and parcel of the cost of the asset. Subsequent measurement. Now, after you have bought the property, plants, and equipment, and you incur subsequent expenditure on that property, plants, and equipment, the standard says that all subsequent expenditure should be capitalized. When I say capitalized, means add it to the cost. Add it to the cost of the asset. But if subsequent expenditure is incurred just to maintain the asset, that one is a revenue expenditure. When I say revenue expenditure, it means it will go to the profit and loss account. When I say capital expenditure, it means you add it to the cost of the asset. So you have to bear that one also in mind. Apart from the initial measurement, which we have said that it should be measured at cost, then thereafter, what happens? That is what is called subsequent measurement. Subsequent measurement. Now, the business has a choice to choose between measuring it at cost or using revaluation method or model. So subsequent measurement can be cost model. You can choose the cost model, or you can choose the revaluation model. Now, the moment you choose the revaluation model, then you are going to use the fair value of the asset. The fair value of the asset. But when you use the cost model, then you use the historical cost of the asset less any depreciation that you have provided on the asset so far. So fair value also implies the replacement cost of the asset. If you want to replace the asset today, how much will it cost? So the revaluation model at times is also called the replacement model or the replacement cost. So you have to note that. Now, there's a caveat here that you need to know. If you decide to use the cost model for subsequent measurement of property, plant, and equipment, you can, in future, change it to the revaluation model or the fair value model. But if you decide to subsequently measure the PP using the revaluation model or the fair value model, you cannot revert to the cost model. No. So when you decide to use revaluation model, you cannot revert to using cost model. But when you use the cost model, you can revert to use the revaluation model. Note that it's very important. How do we talk about revaluation? How do we revalue the assets? How do we revalue the asset? When you say the asset has been revalued, what does it mean? Now, an asset is revalued when we have a new value which is different from the value that is shown on the financial statement. When you give a new value to the asset, other than the value that is shown on the financial statement, then we say that the asset has been revalued. And this revaluation can be more than the original value or can be less than the original value. So we can have a revaluation increase or a revaluation decrease. Or the revaluation increase, you can say revaluation surplus. And then we can have a revaluation loss or decrease. And whenever you have a revaluation surplus, you take it straight to the statement of changes in equity. The first day that we met, when we were looking at the conceptual framework, and we look at the major financial reports, we talk about the statement of changes in equity. So whenever you revalue assets, and you get a surplus. Surplus means the new value is greater than the old value. That is the surplus. And you get surplus. That surplus is taken to the statement of changes in equity. But where under revaluation, you have the value decreasing, which is a loss, then that loss is taken to the profit or loss account, and you name it as revaluation loss or decrease in revaluation. So that's the treatment. If we get profit or surplus, it will go to the statement of changes in equity. When you get a loss or a decrease, you take it to the profit or loss account. So impairment loss is also treated the same way as revaluation decrease. Impairment loss is treated the same way as revaluation decrease. So note that one also. Are you there?
Yes, sir.
Yes, sir.
Very good. Very good. Now, we also talk about depreciation. And how do we calculate depreciation? Depreciation is calculated based on the cost of the asset, the useful life of the asset, and maybe if you have a residual value or the scrap value of the asset. When we start actual calculation, you will see how we will account for depreciation. It is very, very important. So this is all about depreciation. I've talked about the useful life. I mean, the life that the number of years that the assets will be in use. So we will deal with that one. We all are on depreciation. Okay. Then I come to very important aspects. I talked about recognition. I talked about measurement. Now on this slide, you will see de-recognition. De-recognition. Earlier, I told you that when we say you are recognizing, it means you are showing the asset on the financial statement. So when we say you are de-recognized, it means you are removing the assets also from the financial statement. And in what situation can we remove the assets from the financial statement? You can do that when you sell the asset that is on disposal. When you sell the asset will no longer be there. So it means you have de-recognized the asset. You have removed it from the financial statement. Or when no future economic benefits are expected from the use or the disposal of the asset. In that case, there's no point maintaining the assets on the face of the financial statement. So we say that you have de-recognized the assets from the financial statement. These things that I'm mentioning, take notice of them. You may meet them on the quizzes. It is very important. Just today, I received a message, a text that I should submit your quiz and end of semester questions. So when I go to the office tomorrow, I'll be working on them. So Friday, because I have to set about 60 objectives. Some will be used for quiz, Some will also come to section A at the end of semester. You have written exams on it before, so you know the format. So some of these things will be appearing in the quiz. So you should take notice of them. It's very important. Then, when we say you are disclosing, it means property, plant, and equipment. What information should we make it available for the users of financial statement to help them understand the financial statement? So information about property, plant, and equipment that we should disclose when we prepare the financial statement are what I have put there as 1, 2, 3, 4, 5 in that order. 1 is the method that you use in measuring the property, plant, and equipment. So we call that the measurement basis for determining the gross carried amount of the asset. You should also disclose the depreciation methods that you have used in calculating the annual depreciation of the assets. You should also disclose the useful life of the assets or the depreciation rates used on those assets. You should also show the accumulated amount of depreciation at the beginning and at the end of the period. So the depreciation at the beginning, the amount you provided during the year, and the amount at the end of the year should all be disclosed. So when I ask you, what are the disclosure requirements? What are the disclosure requirements of property, plant, and equipment as given by IAS 16? You should be able to tell me. You should be able to tell me. So these are all information that you need to disclose. If in the course of the year you have bought additional property, plant, and equipment, you have to show it. If in the course of the year there has been disposals, you have to show it. If in the course of the year new, apart from what you have, new ones have been acquired, you have to show it. So all these are some of the information that you have to disclose. It is very important on the financial statements. So all these are some of the information. So there are many. You have to learn all of them. All these are there. So you have to learn all of them. But it's not difficult. So for instance, look on the slide before you. Look on the slide before you. Now, assuming we have 2 property, plants, and equipment. We have land and building. There are plants and machinery. Now you see cost or valuation at 1st January. It means at the beginning, you state it for each asset. If there has been revaluation surplus, you add. If you have bought additional ones during the year, you add. If you have sold some, you have to subtract. And that will give you the value at the end of the year. That will give you the value at the end of the year, which is 31st December. Then we also, the same way, look at the depreciation. Depreciation at the beginning of the year. Depreciation that you provided during the year. If you sold some assets, that part of the asset that you have sold, its depreciation must be deducted. And you can get depreciation at the end of the year. So now you have 2 figures. The cost of the asset at the end of the year, and then the accumulated depreciation at the end of the year. So when you deduct the depreciation from the cost, then it will give you the book value of the assets, or you can say the carrying amount of the assets as at the end of the year. So land and building, the carrying amount will be 45,500. Plants and equipment, the carrying amount is 41,000. Beneath it, you see, I've written 1st January 2024. Sorry, 1st January 2004. It means that at the beginning of the year, what was the book value or the carrying amount? Now look at the cost or the valuation. 1st January, land and building was 50,000. Plant and machinery was 40,000. That's at the beginning of the year. Then look at the depreciation at the beginning of the year. Land and building is 16,000. Plant and machinery is plant and equipment is 10,000. So when it subtracts the cost at the beginning and the depreciation at the beginning, that is what you are getting, 34,000 and the 30,000. So it is not anything difficult at all. It is not anything difficult at all. So I have questions here. The very lengthy one. Now let's see. In a statement of financial position prepared in accordance with IAS 16, what does the net book value or carrying amount represent? And if you look at this table, you know what the net book value represents. Then, in a set of financial statements prepared in accordance with IAS 16, is it correct to say that the net book value, which is the carrying value figure in a statement of financial position, cannot be greater than the market or the realizable value of the partially used assets as at the statement of financial position dates? And I said, explain your answer with reasons. This is the solution. This is the solution to the question. In simple terms, the net book value of an asset is the cost of an asset less the accumulated depreciation. That is all depreciation charged so far. It should be emphasized that the main purpose of charging depreciation is to ensure that profits are fairly reported. Thus, depreciation is concerned with the income statement rather than the statement of financial position. In consequence, the net book value figure in the statement of financial position can be quite arbitrary. In particular, it does not necessarily bear any relation to the market value of an asset and is of little use for planning and decision making. So when I make the slides available, you can go through and get more insights about IAS system. Now, let me quickly also look at IAS 40. I've told you IAS 40 talks about investment property. So let's look at that one also. I'll stop sharing now and let's see how we can find investment property and show it there also. There's just a slight difference between IAS 16 and IAS 40, investment property. I told you earlier that when we say property, plant, and equipment, it means we are going to use that asset to produce or to rent it to get income, or so I gave you three scenarios. Use it for production of goods or services, for rental, and then also for administrative purposes. But the moment you say investment property, the meaning changes. And investment property, please, can you see my new slide, IS40?
Yes.
You can see that.
Yes, sir.
Yes, sir.
Very, very good. Just a minute. Just a minute. So the IS40 talks about investment property. So we know what is meant by investment property. Now, this is the definition for investment property. It is any property, either land or building or part of building, that you hold, and the purpose of holding the land or the building is to earn rentals. I mean, you rent it out, or for capital appreciation. That is to say that the property is leased out. When I say is leased out, that means you rent it out. And that leased out is termed as a finance lease. So when I say a finance lease, we are talking about a type of lease in which substantially all the risks and the rewards of ownership, all the risks and rewards of ownership of an asset are transferred from the lessor to the lessee. So it is like you buy an asset on credit for long term. You buy an asset on credit for a long term. So where somebody transfers the ownership and risks that is associated with an asset to another person for the purposes of rentals or for capital appreciation or both, then we can say we are talking about investment property. It must be noted that properties held for sale in the ordinary course of business and inventories, I mean stocks, are not investment property. Let me explain. Assuming I am an estate developer, I build houses and sell. So when I build the houses and sell, that is inventory, because that is the normal thing I do. So that one is not investment property. But when you have a property, you hold it. You don't sell it, you hold it. And you can rent it to get more profit, or hold it that the value will go up in the future so that you can sell and get profit. That is what we classify as investment property. So that is why I said it must be noted that properties held for sale in the ordinary course of the business and inventories are not investment property. So before you can say that this is an investment property, the entity's intention regarding that property is very, very important. So we call that the business model. That is the entity's intention regarding that property is the primary criterion for classifying a property as inventory or as investment property. So your intention is to hold it for the value to appreciate. Then it is investment property. If your intention is to buy and sell, that is a normal business. So that one cannot be classified as an investment property. So you have to note that one also. So I've given you examples of investment property. Land held for long-term capital appreciation. Go on what I said to us for the value to go up, then before you will sell. It's an investment property. Land held for a currently undetermined use. You have a land, you don't know what you're going to use the land for now. It is also an investment property. Building leased out under an operating lease is also an investment property. It's also an investment property. So it says building leased out under an operating lease. Now, what's an operating lease? An operating lease is a type of lease in which the lessor means the one giving out the property, will retain substantially all the risks and rewards of ownership of the assets. So you could see that the opposite of a finance lease is the operating lease. Earlier on, I told you that a finance lease, the risks, and I talk about the risks and ownership is past. But with the operating lease, the risks are substantially and the rewards are substantially retained by the lessor. So very soon, when we pick, I think next week when we are looking at IAS 36 and 38, we will come to look at finance lease and operating lease properly. Then property that is being constructed or developed for use as investment property. So these are examples of investment property. So in the quiz, I can state so many things. I said, which one of the following is an example of an investment property? You should be able to fish it out and tell me that this is an example of an investment property. It is very, very important. So many of them are here. So many examples to learn them. So many of them. All right, up to this side. So the next one, as we did with the IAS 16, the same procedure that we are following. How do we recognize and measure investment property? How do we recognize and measure investment property? Now listen to what the standard said. He says that the recognition criteria for the initial and subsequent costs of investment property correspond with the criteria for property, plant, and equipment as we have in IAS 16, which means that to recognize and measure investment property, we can use the same criterion as we used under IAS 16. That is to say that when it is probable, I'm talking about the recognition, when it is probable that future economic benefit will flow to the entity and the cost of the property is known. How do we measure it? Initially at cost, subsequently at cost or revalued model. So note that the same thing applies under investment property. So you see it here. An investment property is initially measured at its cost. The same thing applies to the property, plant, and equipment. And then what constitutes the cost? And I gave you the actual price plus any incidental expenditure that is incurred on acquiring the asset. So it's the same thing as we have here. Now, fair value of the, let me see, there's something here. Now, okay. You can also measure it using the revaluation model, which I talk about the fair value. Subsequently measure it at fair value or the revaluation value. At times too, where you know the future cash flows, of the lease payments. Because when you lease, like you rent something, that's a lease. When you rent something, you pay rental charges. So when you know the income that you are going to get from the lease of that property, you can value it using what we call the present value. Now, present value means you discount future cash flows. You use discount factor on future cash flows and you bring it to its present value. That one is accounted for in something we call the time value of money. Time value of money. Probably in your next semester, when you are doing advanced financial reporting, you know the time value of money. You do some present value, you do future value, and the rest. Annuity, present value, future value. Even some are in quantity. I don't know whether you are doing it or you have done it. Have you done quantitative methods? Rita, have you done quantitative methods?
We are doing it. It's part of
You are
it.
doing it. Very good.
Yes.
Very good. I'm very happy you are doing it. Okay. So, subsequently, as we did for IS16, they can choose the cost model or the fair value model or the revaluation model. It's the same approach that we are going to use. And I gave you a caveat that when you choose to subsequently measure the investment property on the cost, you can change it to the fair value or revaluation value. But when you decide to use the fair value or the revaluation value, you cannot revert. You cannot revert. That is what you see here. Let me go through this line. It's very important. An entity has to choose either the fair value model or the cost model as its accounting policy, and the entity generally has to apply that policy to all of its investment property. The standard states that it is highly unlikely that a change from the fair value model to the cost model will result in the financial statement providing more relevant information. Therefore, normally, it is not possible to change from the fair value model to the cost model. However, a change from the cost model to the fair value model is generally possible. It's generally possible. So note that it's very important. The reason why they say it's not possible is that fair value gives more information than the cost. So when you have a fair value, why then do you change it to the cost model. But when you are using the cost model, because the fair value give more information, you can change from the cost model to the fair value model. All right. So this is how the cost model goes, and then the fair value also goes. So it is not anything. Because I am dumping this because I asked you to do IFRS 13, which is basically on the fair value. You learned. Let me ask you, did you see active market when I gave you the assignment? Did you meet active market?
Yes.
You met active market, right?
Yes, sir.
You met, yes. You met, what again? What again did you meet? Active market, What again? Hey.
Advantageous market.
What did you say?
Advantageous market.
Advantageous, most advantageous market, What other market again? Oh, I see. Okay. You also met first level inputs, second level inputs. Is that right? Third level inputs? Or you didn't meet that one?
Yes. We met it.
Then you also met participants on the market, isn't it?
Yes, sir.
You also
Yes,
met
sir.
arm's length transaction. They will feature prominently in the quiz. Learn them. Okay. Now, there's another thing that we need to know. At times, we can transfer investment property to become property, plant, and equipment. And at times, too, we can transfer property, plant, and equipment to become investment property. So you can have transfer to and transfer from. Transfer to investment property, then transfers from investment property. So once you are transferring to, it means you are bringing an asset which originally was not an investment property to become an investment property. Transfer from means that originally that asset was investment property, but now you want to de-recognize it from investment property to become property, plant, and equipment. That is what is meant by transfers and disposals and de-recognition. So transfers and disposals and de-recognition and disclosure transfers to or from investment property should only be made when there's a change in use. Now, you are not using it to rent other people. You want to use it for administrative purpose. The moment you stop for renting it and use it for administrative purpose, then you have transferred it from investment property to property, plant, and equipment. If initially you were using it for administrative purposes, and now you have stopped renting it out, then you have transferred to investment property. You have changed it from property, plant, and equipment, and it has now become an investment property. So you have to know transfers to and transfers from. You have all this information there. And lastly, this is the last bit of it, disclosure requirement. You know, when we did the IAS 16, the last part was disclosure requirement. So what information should we also disclose on IAS 40 investment property? We have general information that you need to disclose, information on the cost model, information on the fair value model. For instance, on the general information, you can talk about the measurement model, whether you are using the cost model or the fair value model. If you are using the cost model, what information should you show? The depreciation methods, the useful life, or the depreciation rate. If you are using the fair value model, what information should you disclose? So these are what you need to know. And I've given you example there. The example will help you to understand it. So in the nutshell, we have been able to look at two different standards. That is IAS 16 and IAS 40. Go through them. If you have any issue, we will address them next week when we meet. Are we making a week today or Sunday? Let me know.
A week today.
A week today, sir.
Okay. So we are finishing it a week today, where we have another two standards to look at. We will look at IAS 36 and then IAS 38. One will deal with intangible assets, and then we have impairment. So I'll make the slides available to you tomorrow when I go to the office. I thank you very much for attending upon this lecture. We will meet a week today. Thank you very much.
Thank
You're
you, sir.
Welcome.
Thank you, sir.
You're welcome, sir.
Honorable Delali. Azilet.
Hello.
Hello, Azilet.
Yes, madam.
He's gone. Delali is gone.
He's gone. I wanted to ask him, when are we meeting for our assignments? The principles. I think we are in the same group.
Yes.
Today is Tuesday. I wanted to find out when it's appropriate for us to discuss.
Meet. Sir Daniel.
Yes, please.
Okay, so apart from the assignment, I think when we are doing the prepping, I think we are not involved in crowd. Why?
Oh, it's not deliberate. I've been busy.
Hey.
Yeah.
And then law course and answer there.
Every man, they don't have problem.
I'll join very soon. No, you didn't stop. I don't know why you have stopped.
Hey, we have not stopped, though. We have
That's
not
all.
stopped. Yes, we have not
They
stopped.
don't have problem. That's my observation.
Hey,
Because
because
how much they are seeing.
I wish we were all writing at the same place. It would be nice.
Oh. Since I'm the only one.
Oh. Oh. How I wish we can even change the sentence.
Myself, I'm the only person writing there.
Me too. So when you go and then maybe the formula you are using is not correct, you are just using it.
You are there with your goal.
Hey, Charlie.
At least we can discuss that before the quiz and the end of SEM. So
with the assignment, they gave us in management, no? Are we to summarize all the chapters or each group with a chapter? I don't understand.
Each group with a chapter.
Okay.
yes.
So we are taking chapter 5.
I don't know. That's the functions of business management.
Okay.
Yes, we were left with last 5 topics. So that's why I say we should create 5 groups. Each group will take a topic accordingly.
Okay, so when you are in group 5, it means that you are
We are taking the 5th chapter.
Okay.
Yeah, the
Okay.
last topic, yes. But the lab promise
So
bringing various areas on the platform. I think we can see it there. It's said by the close of today.
okay. Okay. Then
So by the
hopefully
close of we do what?
the various chapters.
Yes.
He will
Okay.
just he will just give it up. Okay. So I hope hopefully tomorrow we have to do our prep and start with it.
I think so.
Right now the quantitative and the formula is so I think we can still do some revision on it and see what we can do.
I think so.
So we are
And then
meeting God willing
yes,
tomorrow.
yes, God willing tomorrow
Okay.
by 7:30. Okay.
All right.
The
For the
Larry
complete for the complete year,
the computing. Oh. Hey, Uncle Daniel, I
Yes,
think
please.
by now you are finished. Oh, the computing.
It's not only you. But last time I was discussing with the leader, we need somebody to take us through, at least for us to pass.
I contacted one of my friends at UCC. He is in level 300 right now, so I said you should get someone that has done the course for me. Let's see the past question and see how it is.
Okay.
Yeah. So he said you get back to me, but I'm still waiting for his test.
Okay. Then let him get
I
back
see
to
very
you.
good. We should look for ATA.
And so like I'm trying to
The line.
I'm trying to get the guy there. So if I get the guy there, then I'll know my next move.
Okay.
Okay. All right.
Mm. Because what the man is doing last time he was even asking questions. I can't even say like
It's only you.
in simple terms, I can't say 1, 2, 3.
it's like he's taking master students.
Ah,
This one there.
the Python, if you want to teach, like take the thing from the basics one after the
Basics,
other.
like.
So we'll grab the concept.
Exactly.
Yeah.
Then you are just opening something and doing some nonsense things. Like how do you want this to understand?
because
He's taking master students.
you see the first day when I asked him that is he teaching, he said no, he's just giving us the scope.
Yes.
And the scope, yeah, he
Okay.
said that he's just giving the scope, and still up to now, 3rd week, you are still giving scope.
Serious.
And he said he has given us the slides, so we should go look at it.
There's nothing in the slide. Like last time I was trying to
There's
watch the
nothing that
videos and
I
I
see
was like,
videos and there's nothing in his life.
the
Yeah, the
videos too
YouTube.
is just the same thing that he has been doing.
Yes. And sometimes his lectures with different students.
Well, I don't even know. So let's try and find out. As you said, if we get a TA, then the person will just take us through.
Yes, the person has done the course before, so he knows the in and out. So
Yes.
you don't worry. Like I'll get you give me by the close of week. I'll get the person. But you also should be searching in case you get someone now. Yeah.
Okay.
Has the man closed already?
Yes.
Yeah.
Where has he ended?
He ended disclosures.
Disclosures, measurement.
Okay. So did you say I should contact him for the slides?
He said by the close of tomorrow.
Okay. You will send it to the okay.
Why you
So
left?
next week today we'll meet.
We'll meet. Yeah, next week will be our final meeting.
I think so.
My only headache now is this computing. Like I don't even know where they pick this course from.
Oh.
Computer application in accounting. There's all the things we are doing. There's nothing related to accounting.
But he when you look at it, he is telling us how to. You see, the thing is that because he's not using the correct way to teach us, that is why we are having the
Yeah.
because
I thought
we want us to know that if we want to create transactions, it's just like reusing codes, and after that, we'll be able to create a transaction and solve it.
Yeah,
So,
yeah.
so instead of him to go through the correct way, he with the way he's thinking, he teach as if we know already.
We know already.
Yes,
Yeah.
yes.
Yeah, that's how he teach.
Hmm.
I think
This thing is giving me headache, and I like. So I was just saying like
Honorable, can you talk
let's
to him for you?
but
I should talk to him.
Yes. That
hey,
what he
no,
said, we don't understand.
Ah, okay, okay, yeah. So that's the best way.
you
Because
that
some of us,
Oh,
you
Because
see
like last
when
time too, when we were trying to tell him last time that that was the reason why me I left the class last time, because I was just wasting my bundle and my phone battery.
so who's when Sir Daniel asked the question, the I think he asked the question and then he said we should find it in using the any of the AI devices to find the solution.
Yeah,
And then there was a phrase like, I don't know how. You see how he answered it. You can't tell me then. So
yeah,
all
yeah,
what
yeah. He said if you are ready to
all what
learn
we have,
something, you will learn it, something like that. Like
yes. If you
they
confront
say
him
we
and
don't
say,
understand what he's doing. It's not that we understand it, and it's not that we get
yeah.
the concept, and we don't get the concept.
so
So
you let's
I'll
try
send
to find a
send him
tea.
a text. Yeah, I will send him a text. But okay, so I'm going to do two things right now. I'm going
Yes,
to get that guy. Then I will
yes,
send him a text before we meet for the next lectures.
yeah.
okay.
But it
Mm.
should calm down. It should come. We don't understand what
No,
he's
at
doing.
least if you start with the basis, maybe you type this,
Exactly.
okay,
Even
then
the first thing that we learned, big data, those things, like I was reading the slides, like, I was like, what is this?
you type panda as DS.
Hmm.
I was
Asemu.
expecting that when he has to bring
Hmm.
do this, do this.
We we pray for the best.
Oh, by
Yeah.
all means. So you
Hmm.
let's meet tomorrow and see what we can do.
Okay, okay,
Okay.
okay. So
Good night.
tomorrow we'll be meeting, right?
Yes,
Okay. Tomorrow, what are we having?
we should follow the timetable.
Today we are supposed to do principles before we have this class. So
Yes. So tomorrow we
mm,
are coming off.
yeah, tomorrow is financial reporting. So we'll just go through again financial reporting.
Okay.
Okay.
Good night.
All right.
Some. I cry somebody.
Yeah, baby.
Oh, this is it.
Hello, hello, hello.
Hello.
Yes.
We are in the same group. Are you guys aware?
Yes.
Uh,
And
like
uh,
I was trying to get the topics that the man said we should. So group one is leadership. Group two will be like I'm not getting all the five. I got only four.
It's
Is
right.
is leadership, controlling. Guys,
The functions planning, organizing,
no, we
leading.
did. He took us through
I
planning
did
and
planning
organizing.
and organizing.
Yeah, so he said he's left with five or so. So he said we should form the five groups and share them among us.
So we are taking the
the
fifth one.
So yeah, and I'm trying to get I looked at the course outline, but I'm getting only four
Can you
things. I'm
ask
not getting.
your colleague, Madam
Yeah,
Bertha? If,
I asked them to. They also don't have any like. So I'm
oh,
waiting for I asked the guy that has been sending the recordings to the group. I asked him to send me the record. He said he will send it if it's latest tomorrow or Thursday or so. So when he send it, I'll check the last part of the recordings to see the place that he talked about the group work. So I'll get these things from there.
oh,
Mm.
and he said that uh you'll be collecting it on the 18th of.
Yeah. So like this weekend that we have, we will meet in our groups and do the discussion. Then after that, we select one person to type and like present the how it will be before we send it to him. So this Saturday is mainly for the groups to meet and do the discussions.
Okay, so all the
Yeah.
groups.
Yeah. So you anyhow that you want to meet, you contact your members and meet.
Okay.
Mm.
Okay then.
Okay.
But I
Yeah.
don't
You
know
Bye.
why all of us, the accountants, all of us don't want us to do the prepping. It's
Is
like
it?
only the three of us. I'm talking about those doing the accounts. It's like only the three of us at the meeting. Why? The rest, what is it that they understand everything or what?
Salvation is personal.
But maybe they can also assist. Maybe they know they should come on board and assist some of us.
uh you can't force them. So anytime we do it, like to these things, you do it willingly. So when you put it in the group, yeah.
Yeah.
Mhm.
Okay, then let's meet tomorrow.
Okay.
Okay.
Okay, then. Good night.
All right.